Where I think we are now is this uncomfortable sort of teenage period where it's about half speculative and half fundamental. And the reason that's an important realization is the speculation is driven by these macro factors: risk on, risk off, high vol, low vol, money supply, money supply. And the fundamentals is driven by institutions buying, sovereign wealth funds buying, etc. And so we're in this weird moment where the speculative side is pulling us back at the same time that the fundamental side is pulling us forward. But we're on this journey to where fundamentals matter more. And that's the reason I think we're going to get to this decoupling.
Matt Hougan believes we are witnessing the dawn of a U.S.-driven crypto golden age. With regulatory clarity, institutional adoption, and macro tailwinds aligning, this market is just getting started. Bitcoin is maturing from speculation to fundamentals. Institutions are embracing not just Bitcoin, but soon Solana, Ethereum, and beyond. Stablecoins are pulling billions into the crypto ecosystem. And the monetary authorities, they'll blink. They always do. For long-term investors, this isn't the end of the story. It's the end of the beginning.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Just getting started. And part of it is we haven't ever seen this sort of shift before. We went from full gale-force headwind to full gale-force tailwind, right? We are not far removed from a US senator having a war on crypto. And now we have a strategic Bitcoin reserve and a strategic crypto asset stockpile. And legislation for crypto is at the top of the priority list. It's not like the winds of change shifted a little bit. It's like we were climbing up a roller coaster hill and now we're going down the hill. It's such a titanic change that I don't think we've experienced what that's like. And I think it's enormously bullish. I think it will overcome any sort of macro uncertainty that we face over the next few years. And we'll really see what this industry can do when it's not constrained. So if you go back to the first day that Bitcoin exists, it's 2009, it's trading below a penny or whatever. It's not even really trading, but if there were trading there. A bet on Bitcoin was a purely speculative bet. There was no fundamentals of Bitcoin, right? There was no supply demand mismatch. There was no mining power. It was run on one machine. It's a purely speculative bet. If you go forward to 2050, it's no longer a speculative bet. It's 100% driven by fundamentals of supply and demand and monetary growth. So you have these two poles, 100% speculation and 100% fundamentals. And Bitcoin can't do that in one fell swoop. It has to trace down the curve to be 90% speculation, 10% fundamentals, 50% speculation, 50% fundamentals, 75% fundamentals, 25% speculation. Where I think we are now is this uncomfortable sort of teenage period where it's about half speculative and half fundamental. And the reason that's an important realization is the speculation is driven by these macro factors: risk on, risk off, high vol, low vol, money supply, money supply. And the fundamentals is driven by institutions buying, sovereign wealth funds buying, etc. And so we're in this weird moment where the speculative side is pulling us back at the same time that the fundamental side is pulling us forward. But we're on this journey to where fundamentals matter more. And that's the reason I think we're going to get to this decoupling. And from what I can see, we're really on the fundamental side of that curve. I think we're getting pulled back because the macro effect is so strong right now, right? Tariffs on, tariffs off, tariffs on, tariffs. Oh, it's panic. But
war here, not there. Yeah.
Fundamental thing is too strong to deny. And I think we're going to see that decoupling this year. And what you've seen with the Bitcoin ETFs is once we got a Bitcoin ETF and once we got pretty good regulatory clarity around Bitcoin, you started to see the institutions come in, right? Today, we have pension funds, we have endowments, we have the Abu Dhabi Sovereign Wealth Fund, we have financial advisors all investing in Bitcoin. And I think that tells you a little bit about these downstream assets. We're still at the phase in the US of getting better regulatory clarity on everything beyond ETH. We've made a lot of progress, but there's still some room to go. And we don't yet have ETFs. But once we have those two things, I think you're going to see the institutions take interest in Solana, I think you're going to see the institutions take interest in DeFi, and I think a number of assets down the spectrum. When we talk to institutional investors, it's really one of two pitches. One is a pure portfolio management pitch, which is this is an asset that's liquid, that's not correlated to other assets, so it doesn't go up and down at the same time, and that has high historical returns and a long way to run. And historically, if you've added just a few percent into your portfolio and rebalanced it, you've gotten higher returns without more volatility. It's sort of like a magic bean for portfolios. And so on the one hand, we make this portfolio only pitch about let's strip this from all the weight that comes with saying the word Bitcoin and all the weight that comes from saying the word crypto. Let's look at this as an asset. If you do that, you want it. And now if you have zero, you're short against the global benchmark because it's part of the world's capital assets. And so a lot of people buy that perspective. The other perspective is let's talk about what this really is. Like, let's talk about how a blockchain works, how it creates digital property rights for the first time, how it creates digital sovereignty, and how this is going to be the version of gold for the younger generation. And if you look at virtually every time there's been a digital version of a physical good, whether it's newspapers or advertisements or DVDs, every time the digital version gets to be bigger than the physical version. We're in a digital age. And so why do you think, despite the incredible success over the last 15 years, that won't be true here? And I think once you get people on that side, they realize like, whoa, we're at 2 trillion. Just to match gold, we got to go 10x. And this is probably more useful than gold, has more applications than gold. And so there's just this enormous upside. As you said, it's probably the best risk-adjusted time to buy it in history because a lot of the risks have been removed, but you still have this enormous upside. So one of those two pitches is usually how we tackle it.
Hougan also highlights the power of stablecoins in onboarding users to crypto ecosystems. Today, stablecoin activity already accounts for 6 to 7% of Ethereum's revenue. As global adoption grows, potentially to billions of users, stablecoins will become the gateway drug to DeFi, NFTs, and other crypto-native apps. Need a wallet to hold stablecoins? You're one click away from using Uniswap, Aave, or other on-chain platforms. This Trojan horse effect, using stablecoins to bring people into crypto, could drive mass adoption far faster than traditional user acquisition methods.
I sort of think, these cycles starts because there's a huge catalyst that brings new capital into the market. And this one started, for what it's worth, almost exactly the day Grayscale won its lawsuit about a Bitcoin ETF. If you go back to when the bull market started, that was March of 2023 was when they won their lawsuit. And that meant institutional investors were coming into this market rips. I think we had another one of those events, like another one of those tectonic 4-year cycle starting events with the Trump election.
Yes.
So we sort of got a second catalyst or a booster. And I think we probably almost reset the cycle in November of last year. And so I think we're like more in year one, sort of the uncomfortable year one of a new 4-year cycle than we are in the rah bullish 3rd year boom part of the cycle. So, I think we'll still have volatility and pullbacks, but I think we're in the start of a new major bull market of this US driven crypto golden age. And I think it's like a few months old, not a few years old. Look, I think if we started a new 4-year cycle in November of 2024, and we have 4 years to go, I think we get to gold parity this cycle. I don't see why we wouldn't, which is today roughly $1 million Bitcoin.
$1 million.
$1 million Bitcoin.
Yeah.
I don't think we'll get there in a straight line, but to me, that's the end of the beginning. When we get to parity with gold, we've gotten to the end of the beginning. I, of course, and I think you think Bitcoin much more useful than gold in a variety of different settings. And so its actual addressable market is larger than gold. But I think let's get to gold and then we'll see where we go from there. And this cycle being the cycle where institutions adopt it and governments adopt it and corporations adopt it feels like the cycle that should get us up to parity. And then again, then we'll see where we go from there. But that's what I think will happen this cycle. And I think we just, in the very earliest days, as you showed from that market cycle theory. We have this huge reserve of gold. If you look at the store value market right now, it's about 90% gold, 10% Bitcoin. If you have 100% gold and 0% Bitcoin, you're effectively short Bitcoin. Like, why don't we at least get to neutral with what the world is saying this reserve is? 90-10. That means sell a little gold and buy Bitcoin, or find other ways to buy Bitcoin. There's no reason the US government should be actively short Bitcoin, which is the position we were in prior to the establishment of this reserve, versus the neutral world position. Just seems crazy to me. Two reasons. I mean, one, from a direct perspective, they have to be issued on layer ones. So stablecoin activity, represents 6 or 7% of ETH revenue right now. And that should, if you think it's going to 10x or 100x, that's actually a lot of direct revenue. And the second reason is it brings people more into the crypto ecosystem. If you need a wallet to use a stablecoin, you're one click away from using Uniswap.
Yep.
If you don't need a wallet because you don't use a stablecoin, you're a huge onboard away from using Uniswap. And so it's like this, Trojan horse or whatever. It gets people involved in the ecosystem so that everything is adjacent to them and immediate. And that's a huge deal. So we'll see sort of all tides ride as we welcome. Imagine 2 billion people using stablecoins, and then tell me what the valuation of ETH and Solana, right? That's sort of the world we're going to. And I think it's a really big deal.
How do you see global liquidity shaping up over the next, let's say, 12 months?
From a macro perspective, my view, which I could be proven wrong, I sort of hold this at a 70-30 level of confidence. But my view is that governments always blink. So governments will talk tough about austerity, and they'll talk tough about shrinking deficits, but they always blink. People cut rates, people print money, people inject money in other ways. And so I think we'll be wobbly for a little while, although you're already seeing monetary levels go up to new all-time highs. But I think eventually it's going to hockey stick at the end. I just don't think even tough talking governments, I don't think can withstand the political pressure to not blink. We've just learned that we can always press this easy button and win votes. I just don't think we'll be able to resist. So eventually, 12 months from now, I think it'll be way up. I think we'll be back in easy.
On the macro front, Hougan's view is that governments, no matter how hawkish they talk, will always blink. Faced with economic or political pressure, they will cut rates, stimulate the economy, and inject liquidity. Already, we're seeing monetary bases across the globe inch toward new all-time highs. Hougan believes that within the next 12 months, liquidity will sharply increase, especially as political cycles intensify. This inevitable return to easing is yet another tailwind for crypto assets. Please like and subscribe.